Chase Wilsey, I got to talk about Best Buy, BBY. When you were in the hallway there in the green room, I was telling our audience to look at the chart at BBY. Guys, pull that back up if we can. Best Buy has taken technically a stair-step pattern up. It's been a really healthy stock since the end of June. All of a sudden, a gap up in earnings, which causes over-exuberance to the tune of 17% increase in one day. Now, that's a ridiculous notion that you should just jump into Best Buy today, is it not?
Absolutely. And
okay, good.
I mean,
I just want to make sure I was right on this deal.
We would never jump into a company just because they reported great earnings. I mean, I would never buy a company the day they report earnings. I would wait until you get some time to actually analyze the new balance sheet, the new income statement, new cash flow statement, read the conference call, and really have time to look over the company. With that said, I have liked Best Buy over the past because they've just been beat down with all these other retailers, worried about Amazon's going to come in and steal all of their sales and all their customers. But, this morning I did hear briefly about what happened, and appliances were great for Best Buy. A lot of people don't think as Best Buy is an appliance distributor, but their appliance sales were up 8%. E-commerce was up 25% for Best Buy. So, I mean, they had some strong numbers there. I'm very excited to read that conference call, look at their new financial statements, but again, would not recommend buying it today.
Because this is an over-exuberant play. And by the way, every time a stock goes up like this, I want you to just reason with me. Look at the chart on this. I mean, take all the fundamentals out of this, and let's just take basic. I'm going to the swap meet. I'm going to buy myself a cassette tape of the Boston album back in 1976, and look at and hopefully I bought that album on June 27th when that album cost me $27. Okay, now if I bought a record for $27 and there was a guy that's willing to buy it from me for $39, what would you do? You'd probably sell it unless you were emotionally attached to it, right? So what do you think all those people that are not long-term holders that bought in that stock on June 27th when the stock was trading at $28, $27 a share? Those people that are not long-term holders will probably be getting out today, right?
Exactly.
And tomorrow.
Exactly, and that's why it's important to be patient.
Well, and here's the deal, too. Because what makes a stock go up or down? What makes a stock go down? There's only one thing that makes a stock go down. More selling than buying. Mm-hmm. So what do you think is going to happen if this thing closes at 39 today? All those people wake up tomorrow and say, hey, I bought in at 28. Well, they just made $10 a share. I'm getting out. Or at least I'm going to get out to my cost basis anyway.
Exactly.
Now, if you're a long-term holder, talk about long-term holders. So long-term holders need to be careful here because then they could get out too early, obviously, right?
Exactly. And I mean, we are long-term holders, and Best Buy has had a very strong balance sheet. They have debt to equity of about 30%, so not too much debt on the balance sheet. Curious to see how the balance sheet looks again coming out this quarter. Mm-hmm. They also pay a nice dividend of about 3%. Before today, the valuation ratios were very strong for the company as well. So from a long-term holding perspective, it looks like a good company to hold. However, you have to always analyze the company after the quarter. And I mean, we do our numbers every single Monday. So I'm excited to, take a look at.
So you'll take a look at the balance sheet on this and find out. Now, is there any philosophy that would say, for example, that if I buy at a certain amount, once I'm up 10%, maybe take some money off the table, go back to my cost basis? Do you guys ever do that, or do you let it ride? I mean, let's say a stock runs 10, 20, 30% over the course of a year. Mm-hmm. Do you take some money off the table and go back to the cost basis on something like that, or do you just keep it in and let it ride?
Most of the time we just keep it in, and if the
Or you'll reallocate if there's a better company, I'm assuming.
Exactly. If the position becomes more than 15% in our portfolio, we'll typically kind of scale it back down and buy something else that, hasn't been performing as well and is another great value. So that's really the only time we'll pare back a stock if it becomes too over concentrated in the portfolio.
The interesting part about this is this is a really good lesson and a dangerous lesson for people because it's great news if you're a Best Buy investor. It's great news it's great to teach a lot of lessons, but I'll tell you what, there are people today that are buying this stock, and I think it's very dangerous. I mean, especially right now. If you bought this stock yesterday, good for you. Do not be one of the fish that buys today.
Well, I mean, the crazy thing is, if you look at the chart, something like this happened last year, where they reported a great quarter and it bumped way up, and then all of a sudden it pairs back down.
That's right.
And I mean, I would not be a buyer of the stock again today. Patience is so important.
What do you guys do though in that case when you're a long-term holder? So let's say that you bought right before the pop, okay? So let's say you bought yesterday and the thing pops up 17%, you're great. And just watch it trickle down again. I mean, at some point, do you put a stop loss in on something like that? Or you're long term, you just stick your guns and you stay there?
Exactly. As long as the fundamentals remain solid, we will stick with the company.
Right.
And people just get so short-sighted, and we actually, at our last client conference, our quarterly financial update, as we like to call them, we took a look at our companies going back 5 years. And it's just amazing to think, wow, this company's up 200% since I bought it 5 years ago. That's great to see. And within a year's time frame, it may have started off down 10%.
Right.
People get so short-sighted, they're not looking down the road 5 years.
Here's my question for you. Moving on to something else. So both of my daughters, one daughter graduated college, one's going into her last year, so I'm dealing with one last year of tuition. Are there better schools than others? Because I can tell you, my one daughter's an art student, and I thought, oh my gosh, I'm going to be supporting this kid till she's 50 years old. Art majors are the lowest unemployment of any major in this country because our biggest export is entertainment. My daughter's been fully employed as as a graphic designer for 3 years. Just got her first raise to $65,000 a year as a full-time. So I can tell you, there are I would have never guessed that art would be, but on the other side of the fence, there are schools that are better than others for popping out millionaires and successful people, right?
Correct, yeah. And first of all, I'm a firm believer in, it's not about the school, it's more about what you make with the education.
Sure.
I mean, I went to Northern Arizona University, which isn't, a very
I think it's a good
school.
though.
It's a good school, but it's not a Harvard. My dad went to National University.
Well, neither is Laguna College of Art and Design, although it's the #2 art school in the country. It is the size of a postage stamp. It literally, you could fit the whole school on a football field.
Yeah.
I mean, so you're right. I think it's not about the school. I think it's what you do there, right?
Exactly. But with that said, there are schools that produce more millionaires than others. And we took a look at a study that looked at millionaires across the world. And 2/3 of the top 50 universities, no surprise, were in the United States. United Kingdom was #2, and Australia was #3 on that list. Kind of ironic, too, though, that China has the #2 largest population of millionaires behind the United States. I can't even think of a Chinese university.
No kidding.
Yeah.
So there are So are people applying to these universities based upon that stat? I wonder. You got to know there's parents that are.
I think so. I mean, you got to think about the return on investment. College is very pricey, and that's something I would think about analyzing before going to that school. I mean, the top 4 universities were actually Harvard, Pennsylvania, which has the Wharton School of Business, probably the best school of business out there. Then Stanford and Cal Berkeley were #3 and 4. Yeah. So California's got 2 of the top 5.
50% of the millionaires are coming out. Well, then again, you got Silicon Valley right there. Very quickly, speaking of return on investment, my daughters are getting in the home mailbox offers for life insurance at age 22 and 23 years old. Good idea, bad idea?
Terrible idea. People sell life insurance as an emotional ploy. It's very easy to sell. It's like, oh, what happens if you die? It's very easy to sell. But to me, I think of life insurance as a sunk cost. I mean, you don't see the benefit. Let's say you're in retirement. You can't say, oh, I spent $5,000 on life insurance. So you don't get to see that policy. I'd rather be investing that money for the long term so you can use that. And really, life insurance
leave a legacy versus a cut a check. Right?
Exactly. And life insurance should be used as a supplement to your wife's income if you pass away. That is what life insurance should be used as.
Chase Wilsey, excellent stuff as usual. Wilsey Asset Management. What's your guys' website?
SmartInvesting2000.com.
Wow, see, I knew you had a new website there. Also, follow those guys on Facebook and Twitter because Chase and Brent do an interesting take on just about all things market related on Facebook, so check it out. All right, Big Biz Show, bigbizshow.com. You can follow us on Twitter. That's Sully on the air. Stand by. We're back in just 1 second. I'm going to tell you about the Biz TV Club.
I call you